Hello, YouTube. What's up, Trade Pros? Sorry, massive delay here. Technical difficulties, couldn't get the internet up and running. But let's talk about a few different things here this morning and give you guys some levels as it is OPEX Friday. So today, options do expire. We don't have the quad which is futures and options expiration. We're just talking mainly about options expiration, which happens the third Friday of every month, and that happens to be today. So OPEX, realistically, there's going to be decent amount of volatility. I think weird flows that are coming in. There has been a lot of zero-day options, especially around the SPX, that have been traded and position. So I'm expecting weird flows overall and kind of wacky movement. So it's not necessarily something that I think is going to be the best of opportunities today, right? Maybe there's some kind of trend that swings one way or the other, but I'm going to be expecting lower trade size, lower trades just in general, just really careful trading on today's session. Yesterday was a great session, and today, realistically, I'm not expecting too much. There's a few things to talk about here. Yesterday, stocks into the end of the day fell off pretty aggressively. Market volatility has come back a decent bit as inflation continues to be the main word in the economy, right? The consumer price index was a little hotter in January. We also had wholesale costs coming in a little hotter, and it wasn't the only thing realistically. Fed's Bullard talked about the long battle of inflation. Also, Mester pre-market talked about inflation, and they both agreed that realistically there was the base case to make a 50 basis point hike in the last meeting, and they're not counting it out, still looking for a 50 basis point hike at some meetings, right? With the target rate by the end of the year above 5%. So we also had initial jobless claims that continued to point to a tighter labor market, which further evidence leads to the higher interest rates that have yet to significantly dent the economy naturally. So that's where a lot of the downside came in. There was a lot of uncertainty from that manner, and like a lot of a decent bit of the Fed speakers yesterday. There was 3 of them, even though Bullard did come in a little later. Those Fed speakers, they did prompt for increased rate hikes and those rate decisions in the coming meetings, right? So we also have consumer debt to talk about. The sum of money owed by the U.S. households has climbed considerably during the fourth quarter, rising to about $350 billion, just shy of $350 billion, I believe. Rising by about $350 billion to $16.9 trillion. And that's the largest Q over Q increase in household debt in 2 decades, right? Taking balances $2.75 trillion higher than before than the pandemic at the end of 2019. So according to the New York Fed's household debt and credit report, not helping the situation was the U.S. central bank's rate hiking cycle, which has raised the borrowing costs on everything, credit cards to mortgages, right, auto loans, all that stuff. So serious delinquency rates of 90 days or more are creeping up too. And while the metric is not near dangerous levels yet, it will remain to be watched as it progresses this year. Also, the debt ceiling is something of a worry as well. Within the next 6 months, the U.S. might find itself not being able to actually pay those loans. There's also something that's not necessarily Fed or inflation related, as we've been talking about this whole time, but there's been a derailing, right? There has been a pretty large disaster of a series of trail derailments, which was based on the rail operator Norfolk Southern, and one led to a chemical disaster in East Palestine, Ohio on February 3rd, while another is said to be carrying hazardous materials overturned yesterday outside of Detroit, Michigan. So those shares have gone off track over the past 2 weeks, falling about 10% to $230, though some like Cohen analyst Jason Sedai are looking at historical proceedings and believe that the unfortunate events may not have long-term impact naturally. So that's one of the things that kind of popped up in terms of individual stock news. Also, we talked about Lockheed Martin and Norfolk yesterday. But overall, let's take a look at what's going on today in terms of the economic calendar. We got more Fed speakers. This morning already, Fed's Barkin already spoke. I'm not 100% sure as what was going on. Also, Fed's Bowen spoke. And then into the end of the day, there's no more Fed speakers, but we have like quarterly services reports, Baker Hughes rig count, some non-event type news scenarios that are coming out. So the Fed speakers are kind of done for this week. We saw them here pre-market. And in some other news, yesterday, Tesla called for a recalling of 360 plus vehicles to fix. We also had Goldman Sachs that pauses efforts to acquire new credit card programs. What else do we have here? That's mainly it realistically. So we can take a look at what's going on with the overall market here and some of these levels. Ba-dum-bum-bum. So over or yesterday into the end of the session, we had a strong downturn, right? Fed's buller came on the wire, non-voter came into the end of the day, really dropped the bomb with inflation talks. He's been very hawkish as of late for a while now, talking about a 50 basis point increase should be something that they should consider. And the market did slump, and we managed to close under the 4,100 level, which is a huge level on the S&P that got taken over finally, and a strong reoffer below that level. So we've entered into a new distribution block. However, they're still buying up that key same support around 60-63 that was bought last time that we saw this level, and prices just rallied pretty much throughout that day and then the following day. So as it stands right now, we are about to open under 82.84. And if that does happen, then I think that's the area where the sellers can try it one more time, right? There's a decent bit of balance within 84-ish down to about 64-ish. So there's also a level naturally around the 70s, but that balance around that 82, 84, if we open above that and we manage to catch a bid, realistically, I'd be getting a little more bullish into at least 4,100, see how that area holds out. 4,102 to 4,105 is a massive distribution block area, which is going to be an attempted sell zone. But that's going to be a target if we start opening up a little more bullish here this morning. So that's what I'm looking at. Also, I'd really warn that there's going to be some weird flows that are coming into the market realistically. These weird flows that are coming into the market are going to be based on OPEX, so it might be a lot choppier and a lot more wild than we're used to. So just keep that in mind. Maybe trading much smaller size. That's what I'm going to be doing today. Maybe not even trading at all. If something really comes at me, then yeah, sure. But I'm just going to keep my eyes on the DOM, see how these distributions hold out, and bid you guys a happy weekend. I hope everyone has a great weekend, and we'll see you guys on Monday. Thanks for watching, and chat soon.